Ladies and gentlemen, I've uncovered something in my research this week that could completely change the way you think about XRP, the crypto market, and even gold. When I tell you what's happening right now inside the Federal Reserve System and how it ties directly into digital assets, you're going to understand why we may be entering one of the most explosive financial shifts of our lifetime. We're talking about events so powerful they will ripple through every store of value against the US dollar. Crypto, gold, silver, stocks, even real estate. And if you're holding XRP, this information could not come at a better time. This is not financial advice. Now, before we dive into the details, let me say this. If you want a proven system to identify life-changing opportunities, the types of 100x investments that can turn small amounts into fortunes, you need to check out my Ultimate Millionaire Investor Guide, Find 100x Stocks. It's packed with documents, images, videos, and more to walk you step by step through how to spot these rare opportunities. I've pinned it in the top comment below this video. All right, let's get into what's unfolding right now. In just 15 days, the Federal Reserve is set to cut interest rates for the first time in 2025. Market participants are already pricing in a 90% chance of a 25 basis point cut at the September 17th meeting. But here's where things get shocking. Even as the Fed prepares to cut, the US 30-year Treasury yield is back at 5%. Those are the same levels we saw during the 2008 financial crisis. Let that sink in. A rate-cutting environment paired with yields that high is a red flag the system is straining at the seams. It gets deeper. Right now, markets are betting on 50 basis points of cuts by the end of 2025, with about a 1/3 chance of 75 basis points. That would require 3 consecutive cuts, an aggressive pivot. Yet despite this, yields are rising. Banks across the country are still charging 7% to 8% interest on loans, even after multiple cuts last year. This tells us one thing: the Fed is losing control. And that loss of control is tied to one glaring problem: massive deficit spending. In just 5 weeks, the US has issued over $200 billion in bonds. Investors aren't eager to buy, so yields keep climbing. When you dig into the numbers, the term premium on the 10-year Treasury, essentially the extra compensation investors demand for holding long-term government debt, is at its highest level since 2014, surpassing almost every year outside of the 2008 meltdown. That means the market is screaming, "We don't trust your debt anymore." Meanwhile, US core inflation is stubbornly back above 3% and rising. Consumer confidence in the dollar, in treasuries, and in America's fiscal management is collapsing. And it's not just the US. Take a look overseas. The UK's 30-year yield just broke above 5.7% for the first time since 1998, despite the Bank of England slashing rates 5 times in just 12 months. The problem is spreading globally. So here's the big question. Why are yields rising even while central banks are cutting? The answer is as simple as it is terrifying. Investors are losing trust in government debt. For decades, the model has been print money, run deficits, issue debt, and hope people keep buying it. But money printing has gone too far. Currencies are being devalued faster than ever before, and long-term holders don't want to sit on an asset guaranteed to lose value. Think about this. If you held US dollars, UK pounds, Canadian dollars, or Australian dollars for the last 5-10 years, you lost 20-30% of your purchasing power. Who in their right mind would keep stacking something that bleeds value when you could be holding assets with fixed or appreciating supply? Gold, silver, stocks, and most importantly, cryptocurrency. And this is why money is flowing like never before into alternative assets. On Monday night, gold hit $3,600 per ounce for the first time in history. Stocks like the S&P 500 have seen record inflows. And crypto? It's next. Right now, we're seeing some capital rotation out of crypto as people chase momentum in stocks and gold. But this isn't the end of the story. Once those cycles cool, the same capital will rotate right back into Bitcoin, XRP, Ethereum, and other digital assets. That's when things get really interesting. Because here's the truth. Governments only have one tool to keep their financial scheme running: printing more money. When debt gets too big, when yields get too high, when confidence starts breaking down, they bail out the banks, crank up the printing presses, and double down. It's the largest and most successful Ponzi scheme in human history, and nobody questions it. But more and more people are waking up. And when they wake up, where do they run? They run to assets the government can't debase. That's why cryptocurrency is the ultimate answer. Unlike fiat, it can't just be printed endlessly. Unlike bonds, it doesn't rely on blind trust in governments. It runs on open markets, 24/7, priced fairly by supply and demand. And XRP, with its unique role as a bridge currency for cross-border payments, is positioned in a way that most people still don't fully grasp. Look at what's happening in the banking system right now. Even as rates are supposedly falling, the cost of borrowing is surging for real people. That means credit card APRs, auto loans, and mortgages are at crushing levels. This disconnect is pushing more individuals and institutions to question the system itself. And when they do, the leap to crypto isn't as big as it used to be. We've already seen massive inflows into gold and stocks. But history shows that crypto benefits next, and it benefits more aggressively. Because while gold's supply grows each year and stocks rely on corporate earnings, cryptos like XRP and Bitcoin operate with hard-coded scarcity. That scarcity becomes exponentially more valuable in a world drowning in printed money. And this is why I believe we are standing right on the edge of a new wave. One that will not only lift XRP, but the entire crypto market to levels most people still can't imagine. So let's keep going, because this shift is much bigger than just inflation, interest rates, and central banks losing control. What we are really witnessing is a structural change in the way global value is stored and transferred. And if you understand how these pieces fit together, you'll see why XRP in particular is in a position to benefit massively from what's coming. First, let's go back to the 30-year yield at 5%. That number might sound like just another statistic, but in financial terms, it's like a giant red warning siren. It means the government has to pay more just to borrow money for the long term. And when the government pays more, everyone else in the economy pays more. Corporations see higher costs of capital, small businesses face tighter credit conditions, and families face higher borrowing rates for homes and cars. This tightening effect ripples across the entire economy, reducing growth and pushing more pressure back on the Fed. Now, the Fed's playbook is simple. They cut rates to stimulate growth when the system shows cracks. But here's the catch. When you cut rates while inflation is still above 3%, you're basically pouring gasoline on a fire. It creates a situation where the cost of living continues to rise while savings and bonds lose purchasing power even faster. That's exactly the type of environment where alternative assets shine. Gold has already responded. Silver is moving higher too. And in the background, Bitcoin and XRP are quietly building momentum for what comes next. The cycle we've seen for over a decade continues. Cracks appear in the dollar system, smart money flows into gold first, then stocks, and then it pours into crypto when the realization spreads that digital assets offer a better store of value than almost anything else available. But here's where it gets even more interesting. Unlike Bitcoin, XRP isn't just a store of value play. It's a utility play. Ripple has been building the infrastructure to connect banks, institutions, and payment providers with faster, cheaper, cross-border settlement. And with every new stress in the global financial system, demand for that kind of solution grows. Because if you're a bank dealing with rising costs of capital, you're looking for efficiencies anywhere you can find them. If you're a corporation struggling with higher debt costs, you want faster settlement and lower friction in your payments. XRP delivers that. So what we have right now is a world where the traditional system is showing weakness at the same time that crypto offers both a store of value and a utility-driven alternative. That combination is extremely rare, and it's why I believe the next cycle will dwarf what we saw in 2020 or 2017. Let's look closer at investor psychology. The average saver has watched food, housing, and energy prices climb relentlessly over the past decade. They've seen their wages stagnate compared to costs, and they've realized that saving in dollars is a losing game. So they're searching for lifeboats. When they see gold at $3,600 an ounce for the first time ever, it validates the idea that hard assets are the answer. But gold is heavy, hard to store, and doesn't move at the speed of the internet. Crypto solves all of those issues while adding programmability on top. Now, institutions, hedge funds, banks, asset managers are a different story. They're not just looking for safety, they're looking for yield, liquidity, and the ability to move large amounts of money efficiently. This is where the design of XRP's ledger really stands out. With transaction finality in seconds, extremely low fees, and the ability to move value across borders instantly, it's not hard to see why institutions eventually migrate toward it as a serious tool, not just a speculative bet. And we're already seeing the early signs. Every time Ripple wins another court battle or regulatory approval, every time a payment corridor opens up using XRP, it sets the stage for broader adoption. Combine that with the macro backdrop of failing fiat systems, and you have the recipe for explosive growth. Think about it. In just 5 weeks, the US issued $200 billion in bonds. Imagine what happens when even a fraction of the capital currently flowing into government debt gets redirected into alternative assets, because investors decide the risk isn't worth it anymore. We're not talking about millions or even billions. We're talking trillions of dollars looking for a home. If even 1% of that capital enters crypto, XRP sees demand far beyond anything we've seen in past cycles. This is why I keep stressing the point. You need to look beyond short-term price action. Yes, XRP may have corrections, just like Bitcoin or Ethereum. Yes, capital may rotate in and out as people chase stocks or gold. But the structural trend is undeniable. The cracks in the fiat system are only widening, and the flows into crypto are only going to grow stronger. And it's not just the US. Look at Europe, where debt to GDP ratios are at record highs. Look at Japan, where yields have been artificially suppressed for decades, but inflation is finally starting to bite. Look at emerging markets, where currencies are collapsing against the dollar at alarming rates. Everywhere you look, trust in fiat is weakening. Everywhere you look, the demand for alternatives is rising. What makes XRP unique in this environment is that it straddles both sides of the equation. On one side, it behaves like a scarce digital asset, a store of value in a world of money printing. On the other side, it functions as a utility token, powering real transactions and solving real problems in the global payment system. That dual role is rare, and it's what makes XRP's long-term potential so extraordinary. Let's also talk about the psychological tipping point. Once enough people realize that dollars, pounds, and euros are guaranteed to lose value, adoption accelerates rapidly. It's like a snowball rolling downhill. It starts small, but as more people pile in, it grows exponentially. And at some point, the snowball isn't just rolling, it's an avalanche. That's where crypto is heading. Right now, we're still in the early phase where gold and stocks are absorbing most of the inflows. But mark my words, once people see crypto breaking through resistance levels again, the capital rotation will be fierce. And XRP, given its combination of utility and scarcity, is going to be one of the biggest beneficiaries. Let's put this in perspective. The global bond market is worth over $130 trillion. If even 0.5% of that shifts toward crypto, you're looking at over $600 billion in fresh inflows. That kind of liquidity doesn't just lift prices, it redefines them. It creates new floors, new levels of adoption, new narratives. It makes what once seemed impossible suddenly feel inevitable. And the timing couldn't be more critical. As central banks prepare for more cuts, as inflation stays sticky, and as yields rise despite policy moves, the system is showing it can't fix itself anymore. That's the key realization. The Fed, the Bank of England, the ECB, they can tweak rates, adjust policy, and print more money. But the core problem is trust. Once trust is broken, no amount of policy fixes it. People move their money elsewhere. And that elsewhere is becoming clearer every single day. Gold has its place. Stocks have their place. But the digital world requires digital value. The next generation of money won't be gold bars locked in vaults or paper notes stuffed under mattresses. It will be cryptographic, instant, borderless, and scarce. That's exactly what assets like XRP provide. So while the headlines focus on rate cuts, bond auctions, and inflation numbers, the real story is the slow but unstoppable migration of value away from fiat and into digital assets. And that story is only just beginning. If you've been following this story closely, you'll notice a pattern repeating across history. Every single time governments push debt to unsustainable levels, every single time they inflate away the value of their currency, people migrate toward harder forms of money. In the past, that meant gold and silver. But in today's digital-first world, it means Bitcoin, Ethereum, XRP, and other cryptocurrencies built for scale. And make no mistake, this migration is happening right now. It's not just a theory. We can see it in the data. Gold at $3,600 an ounce didn't happen by accident. The record-breaking inflows into US equities didn't happen by chance. And the rising transaction volumes on crypto networks aren't a coincidence. They are signals that capital is searching for safety, growth, and efficiency all at once. Now, let's zero in on XRP again, because this is where the story gets fascinating. Most people look at crypto only through the lens of speculation. They ask, what's the price today? What's the price tomorrow? That's short-term thinking. The real power of XRP lies in what it does behind the scenes. Imagine being able to move millions of dollars across borders in seconds, with fees so tiny they're practically invisible. Compare that to the traditional SWIFT system, where transfers can take days, cost hundreds of dollars, and require multiple middlemen. Which one do you think banks and corporations prefer when their margins are under attack? When debt costs are climbing, and when global trade demands speed? The answer is obvious. And Ripple has spent years building the partnerships, the corridors, and the trust required to make XRP a serious tool in the global economy. Here's the kicker. Once adoption reaches a critical mass, it won't just be about banks using XRP. It'll be about ordinary investors realizing that this is the asset institutions are moving toward. That realization will spark the same kind of retail frenzy we saw with Bitcoin in 2017 and again in 2020, except this time the fundamentals will be stronger. And this is where the macro picture and XRP's utility collide. The bond market is groaning under the weight of too much debt. Inflation refuses to die down. Central banks are losing credibility. All of these forces funnel capital away from fiat and into assets that can't be inflated away. Meanwhile, XRP is sitting at the crossroads of speculation and utility. That's a position most assets never achieve. Let's take a moment to imagine the scenario just a year or two down the road. Suppose inflation stays above target. Suppose the Fed is forced to cut rates multiple times to keep the system from imploding. That puts real yields under pressure, which means investors start selling bonds. As they sell, yields rise even further, making debt service costs even more unsustainable. The government issues more debt, prints more money, and the cycle accelerates. Where do trillions of dollars in capital go when bonds no longer offer safety? Where do pensions, hedge funds, and family offices hide when the dollar's purchasing power is falling year after year? They go into assets like gold, yes. But more importantly, they go into crypto. Because crypto is not just a store of value. It's the backbone of the next financial system. And this is where XRP stands out. Bitcoin is digital gold. Ethereum is the world computer. XRP is the bridge asset that makes cross-border liquidity flow seamlessly. Each one has a role, but XRP's role is uniquely tied to the very problem the world is facing: broken payment systems in a broken monetary environment. The snowball analogy I used earlier is worth repeating because it captures what's happening perfectly. Right now, the snowball is rolling. It's picking up momentum as more investors realize that fiat is losing value, as more institutions dip their toes into crypto, as more banks test Ripple's corridors. The snowball is growing, and once it reaches critical mass, there's no stopping it. It becomes an avalanche. And if you're paying attention now, you're ahead of that avalanche. Most people won't realize what's happening until prices are already multiples higher. They'll only wake up when XRP has already moved from under $1 to several dollars, or when Bitcoin has already doubled again. But those who see the structural shifts happening now will be positioned far earlier. This is why I keep stressing preparation. Not panic, not hype, just clear-eyed recognition of what's unfolding. Because this isn't just about making a trade, it's about positioning yourself for a decade-long wealth transfer as trillions of dollars migrate from one system into another. And here's another important point. Don't underestimate the psychology of governments themselves. When currencies weaken, when deficits grow, and when people lose trust, leaders reach for quick fixes. They print, they bail out, they patch things temporarily. But each fix makes the long-term problem worse. And every time they do it, they push more people toward alternatives. That's why I believe the coming years will mark not just a bull run in crypto, but a re-rating of what digital assets mean to the global financial system. XRP won't just be seen as that token tied to Ripple. It will be seen as a strategic asset sitting at the heart of global liquidity flows. And when that perception shifts, so does price. Because markets are driven not just by numbers, but by narratives. When the dominant narrative becomes, the old system is broken, the new system is here, money will pour in faster than most can imagine. At that point, it won't matter whether yields are 5% or 7%, whether inflation is 3% or 4%. What will matter is that people have lost faith in fiat and found faith in crypto. And XRP is one of the clearest bridges in that transition. Now, I know some of you are already thinking, that all makes sense, but how do I actually take advantage of it? And that's the right question to ask. Because understanding the macro picture is one thing, but positioning yourself correctly is another. That's why I always recommend having a strategy, not just buying blindly. You want to know where to look, what to watch for, and how to spot those rare asymmetric opportunities that can turn small investments into life-changing ones. That's exactly why I put together my Ultimate Millionaire Investor Guide. Find 100x stocks. It's a complete blueprint with documents, images, and videos walking you through how to find the same types of opportunities I've been sharing here. If you're serious about getting ahead of the curve, it's pinned in the top comment below. And using my Robinhood link, you can claim free NVDA stock up to $200 with just a $1 deposit. That's right. You get exposure to one of the most powerful companies in the market today, just by starting. I've pinned that link in the comments too, right alongside the guide. So if you're ready to position yourself, if you're ready to move from just watching the system break to actually taking advantage of the opportunities it creates, those two resources are right there waiting for you. Because at the end of the day, this isn't about waiting for someone else to fix the system. It's about recognizing that the system is already shifting, and those who act early are the ones who benefit most. XRP is right at the center of that shift. The question is whether you'll be watching from the sidelines or riding the wave. And let me tell you this: the wave is building, the pressure is mounting, and when it breaks, it's going to be unlike anything we've seen before.